everyone, it's Evan here from the Trade Risk on Friday, January 12th, here with a weekend market recap video. This one's going to be a little bit shorter. I got no video component here either. I'm on the road. I'm traveling in a hotel right now, so I'm hoping first and foremost that I can even get this video uploaded on this Wi-Fi. And for that reason, I'm going to try and keep things a little bit shorter. We're just going to cover the major markets here and probably be a little bit shorter of a video. And in advance, I do apologize for any audio issues or if things sound a little off this time around, just because I am on the road. But I wanted to get something out just to give some thoughts here on this recent market, on this recent strength, really. So let's jump into it here with the S&P 500. You can see we closed right near the highs there, 2 points almost on Friday to the upside, 65 basis points. Let's first take a look here at the weekly chart. It was another strong week, 1.65% to the upside. This is the weekly chart of the S&P 500, the SPY ETF. So we saw 1.6% gain to this week. We had a 2.5% gain last week, so we're up 4% so far. Super strong start to January. It's only been 2 weeks, and you can notice first that price action in general getting pretty extended away from some of these fast-moving averages. Keep in mind that this is the S&P 500 on a weekly time frame. Generally speaking, when we start to get extended away from some of these fast-moving averages at this distance, that gravitational pull to come back down to earth and check back to some of these moving averages does increase. Now, over the past 12 or so months, we have not been in an environment where we actually get strong pullbacks to the moving averages. We tend to get consolidation. So if we take a look back here, we have a little 4-week kind of sideways chopping action. We let the moving averages catch up, then we resolve to the upside. Back here through August and September, here's more about a 6 or so week digestion. Again in June, 6 weeks sideways. March through April of 2017, 6 or so weeks sideways with a slight downward bias. So that's been the general market environment sort of mood that it's been in, and that's the way we've basically gotten all of the gains over the past 12 or so months has come in that fashion. So I wouldn't be surprised as we start to get extended here that we're getting close to potentially topping out. I'm not trying to call a top, but trying to say that some consolidation up around these levels whenever this daily chart wants to slow itself down a bit. I think that might be in the cards of some just cooling off maybe towards the end of January or as we start to slog through busier earnings season. When we look here at the daily chart, once again, you can see momentum at new highs here. So we got momentum making new highs on multiple time frames. Markets are closing at all-time highs. There's a lot to like. Trend, momentum, very strong. Breadth remains very strong and in line, making new highs with this market. But you have to pull yourself back and just remember that we've covered a lot of ground, and you got to ask yourself, if you're putting on new exposure here, what are you trying to get? What is the reward for the risk you're willing to take? I don't know how favorable that equation looks right now. I would be very selective putting on new exposure here, and of course this certainly depends on your time frame, but in general, I want to let my existing positions work, lock in some profits along the way up, trail the stops, and be pretty selective and start to build sort of more cash in hand for you active traders that are looking to just kind of ride this trend up and reduce risk along the way. I think that's important, just not to get complacent and have some type of active strategy of methodology of either trailing your stops up or locking in some gains. Longer term, if you're holding for months and position trading, you're probably again not really worrying about much of this, maybe trailing up stops slightly, but I think that's a good way to stay on top and disciplined, just so we aren't getting too complacent here to the upside. So those are the overall thoughts. Markets are closed on Monday. It's a long weekend, Martin Luther King Jr. Day, so markets are closed on Monday. I think that's it. And then we have earnings season that's going to be fast approaching, so we'll have catalysts there. So pay attention to those earnings dates, and then pay attention to some of the sector spillovers on companies that are reporting, especially those big companies that are fairly influential in their guidance and outlooks. That's always important, and I think the reaction to earnings season, as it always is, the most important thing is the reaction to those earnings, not what the actual earnings are, is something we want to pay attention to. Does the market use them as an excuse to continue to accelerate higher, or is that what gives us the eventual pause and and just taking those numbers in context. So that's the S&P 500. As far as levels go, I mean, we're at new highs, so there's no supply above us. As far as below us, just pay attention to some of these moving averages. I think Wednesday's, single day, the only day we've been down this year, maybe something to pay attention to. The lows here right around 273 is a minor level. But beyond that, I think, the next bigger meaningful level would be around 266, and then pay attention to some of those moving averages there on the weekly chart. So if we go to the Russell 2000, this here, I think, over the past couple of weeks, or at least the past few videos, been sort of using the Russell as the possible canary here to maybe signal that something is different. We talked about how it was hesitating here at highs, and we were waiting to see, is this going to be the continuation that helps fuel this market to the upside, or is this the market that ends up rolling over and puts a pause on this rally? Clearly, we can see it was to the upside. We got that range expansion. Bulls got it done on Thursday here with an almost 2% session to the upside, very clearly breaking out to new highs here and signaling the path of least resistance is higher. We did get some follow through. It was closed off of the highs, but some follow through here on Friday. When I look at the Russell 2000, I look at a market here now that has spent an entire, say, almost month and a half consolidating, moving sideways. This is a more attractive sort of risk to reward setup here or reward to risk setup, in my opinion here, just given the fact that it hasn't melted up as extreme as the S&P 500, NASDAQ, and even the Dow at this point. So I'd pay attention to this, and this is clearly where I think some of the opportunity can come if this market wants to continue to melt up to the upside. NASDAQ 100 looks similar to the S&P 500, 73 basis points higher on Friday, 1.6% on the week, and again, extending itself there on all time frames. So that is the market environment overall. Bulls very much in control. Know your time frame. Keep managing that risk and be selective with that new exposure. Those are sort of the top level thoughts that I would have for this week. So let's get quickly into some other major markets here. We'll go to TLT, which you could see did close down 1%, but off of the lows of the week. Again, still probably frustrating many here that are trying to look for a clean trend to emerge. Over the past several weeks now, we can clearly say that the sellers are in control here. We are making kind of a series of lower lows and lower highs in place ever since topping out here in December 15th, but we really, again, want to see us below, or I would want to see us below this 122.75 level. This has been a significant level that has held as support for the past 8 or so months. That's the level I'd want to see us break below, and you can see we had a very strong, one of the strongest volume weeks, highest volume weeks, going all the way back to the end of 2016 here, as we retested this support. So it'll be interesting again to see if we can if this becomes a lower high and is the next move lower, breaking below this support. That's something we'll have to see. At this point, I have no guesses and no inclination there. I'm just waiting and kind of sitting sideline with some popcorn to see what happens with TLT. So something to pay attention to there. If we go to oil, we continue to see the melt up here as well, 4.5% to the upside, really getting lofty here. MACD making new highs, looks very similar to the S&P 500 chart where we are extended. We've basically screamed higher here for the entire year. Bulls are in control. It's tough to jump on board here, but if you have profits, if you have a position, this is something where you might want to stay comfortable and trail those stops up where appropriate and lock in those gains. We've had a nice run, so let's continue to see if the bulls can support us here for USO. And natural gas, we talked about this here as potential sort of as looking for this to be ideally a higher low that gets put in. We talked about the increase in volume. This to me is certainly riddled with even more characteristics here of carving out a bottom, especially with this volume that we're starting to see come in. We've seen a sharp move off of these lows to start off the year at this point. And if we look at the volume here on the weekly chart, we get the highest volume going back quite some time. You have to go all the way back to 2014 since you've seen volume as large as we saw in natural gas this week, up 15%. So that to me is meaningful. I think structurally it's still potentially in a difficult spot If you're looking at a weekly time frame, this has still been fairly crushed over the past many years at this point. But I think in the short term, intermediate term, and then for you active traders, there's probably opportunity here, as this seems to be carving out a fairly meaningful intermediate term bottom. So that's natural gas. And finally, if we just look at gold here, you can see continuing to work itself higher. It paused for about about 5 or so days. Didn't really give anything back in terms of a price pullback, mostly just through time, and this is back to making new highs, and so is silver. Very similar situation, not quite breaking above these prior highs here, but you got to look at November, where there's quite a bit of supply in this 1630 level. So I think if it does get some follow through above here, and it looks poised to, I think the silver could really start to play catch up there and accelerate higher. So natural gas, all the commodities really across the board are looking pretty strong here out of the gate for 2018. So that's where I think I'm going to end this video. I'm going to try and get this uploaded. Thanks for your patience on this video, a little bit shorter and quality might be a little off, but we'll be back on track next Tuesday for our midweek video. Thanks so much for watching. Hope you had a good week trading, and talk to you on Tuesday.